So a little bit about me. I have my home family and my work family. My home family, I have 5 kids, a wife, and my work family, my Mambu family, most of them I've known for many, many years. The COVID virus, we can't ignore it, the impact that it meant to society. It basically shut down the world. Human interaction all but ceased except with immediate family members that you were stuck in a house with. The normal that we knew no longer existed. So now we had to adapt. We had to adapt how we worked. We had to adapt how we interacted with friends. We had to adapt to doctors and including how we banked in financial institutions. There was no warning of this change. It was immediate and sudden, and it required immediate action by many. It required us to rethink things, to rethink how we did business, to think about how we engaged people. Banks had digital channels, but they never thought about branches being closed. Vision digital banking. It always had an element where you could go into a branch or pick up a phone and talk to someone. They had the opportunity to invest early on in machine learning tools, whether it was natural language processing or robotic process automation, which would have helped a lot when you took humans out of the cycle, but they didn't. And so branches stood, tellers stood, and when they suddenly had to close, the millennials who were pushing for this more advanced technology that folks like baby boomers were pushing back, finally had it right. If we had invested early on, the way we consume financial services and leverage technology would have offset the impact of human engagement. Instead, we had a lot of aggravation because either there was long phone waits or call centers weren't manned. And then all of a sudden, grandma and grandpa had to learn online banking. So let's talk about the key demographics of these 2 generations. Most Gen Zers never knew life without a smartphone. Between 1997 and 2015, when they were born, there was either Blackberries or in 2007, iPhones. 71% of millennials said they'd rather visit a dentist. Think about the time if you applied for a mortgage, that you had to get all that paperwork where you didn't know where it was, paperwork that might have not existed anymore, birth certificates, other information that wasn't easily accessible. And every time getting more and more calls of additional documentation you need. Quite painful. 40 years have not bought something online. They go through their app to buy. They use that smartphone. And unless it's embedded in the way they do business, they interact with people, they're not as engaged in buying the way that we did, maybe online, through a website, or through eBay. 71% of both generations distrust banks. And this comes from the Great Recession, where they saw parents losing houses, being broken up, their parents losing their job, and the utter financial destruction of a lot of their friends and family. And the other side of it is they saw a lot of these financial institutions surviving through government bailouts. 87% of payments are made through digital wallets for Gen Zers. So think about Apple and how they've embedded things. Think about the Venmo and payments that way, or Apple Pay. 48% of Gen Zers think gaming skills will help them later in life. And yes, that's a truth, even my son. So what are important generational principles? Being authentic. So if you think about it, Wells Fargo said, we truly care about our customer, but then it came out that they were promoting high sales tactics that were forcing account openings without the consent of the customer. So they want to live up to what the true meaning of their mission is. Transparent. They don't want pages and pages of fees or a 20-page handbook on all the things that could go wrong and how they are, how the bank is going to take advantage of the customer, or there are ways that they'll be charged a hidden fee. They want to be fully transparent and simple. Available 24/7 by 365, which means not necessarily talking to a human, leveraging things like bots, leveraging components in the system that take you through workflows to change addresses, to dispute debit card transactions without ever talking to a human or stepping foot into a branch. And finally, shared values. They want that corporate social responsibility piece, which a lot of you have probably heard of, is really important to them. What are you giving back to the community? What are you standing up for? Whether it's social injustice or fairness and equality, they want to see those principles expressed by the institution they do business with. So think about how the lines are blurring with Apple. Apple has a great reputation of brand awareness, a respect amongst the millennials and Gen Zers. They've embedded payments. They start blurring the lines of what can and can't be done. And a lot of Gen Zers see Apple as a financial institution. Chime, great story. They're growing triple digits each and every year. In fact, later on, you're going to see from a chart perspective how they are one of the top 5 checking account financial institutions in the United States today. And they're not a bank. Insights into what we are learning and where they're learning and researching. So are they learning from the Wall Street Journal, CBC News, Forbes, Bloomberg? No. They're learning from Reddit, YouTube, TikTok, Snapchat. Case in point, my 19-year-old daughter sent me a text all the way on the left, and it was a TikTok. And the TikTok helped her understand how she could make money from options. It recommended several systems. It gave her a tutorial on it, and then she wanted to explore it. Just one example of how this generation is learning information and taking advantage of financial services. The net result is chaos of financial services from the democratization of financial services. So look at, if you've heard the stories with GameStop, Hertz, AMC, and their share price, or maybe in crypto and Doge. Confused? That's the influence of Reddit, TikTok, and YouTube. So how are they borrowing? If you look at the channels in which they're buying things directly in Pinterest now. And you can see the user increase, the user count going up each and every year and having a significant share of the Gen Zers and millennials. They can do their research on their products and then buy from that platform. Snapchat integrates into Shopify. So I can literally look at a snap and an ad, and within Snapchat, without ever exiting, go ahead and select that I want to buy that product that they're showing me and purchase it, all while I'm in Snapchat with Shopify being behind the scenes. So what is that growing? That's growing the buy now, pay later. Many of these Gen Zers are not interested in things like credit cards. They're interested in financing based on an individual transaction. So only borrowing on something specific, knowing fixed rate terms and payments up front, which goes to that transparency, soft credit score hit, so not to draw down their score, no fees except in lieu of maybe interest, not a revolving available line, so again, they can control and save, and they're reporting to the bureau, so they're benefiting from the benefit of building credit. And you can see these companies, and you can see the massive growth, 10 to 20% growth, and it's expected to go double in 2021. What are we learning about how they're financially maturing? So curated refinancing, like a Credit Karma, where it's literally looking at all their trade lines and calculating how they could save money, and then appending vendors with pre-approval offers without that customer or that user doing anything. Or how easy it is to save money. So I want to set up a retirement account or a piggy bank account. I want to save for college. Another app, Acorn, has made that super easy. Fee-free trading. If you look at Robinhood and you look at the ability very quickly to invest, but more importantly, embed social influence and understanding where your friends are investing, so that way you can invest the way you want to invest. Instead of getting monthly cash rewards at the end of a statement cycle, Apple said, let's give rewards on a daily cycle, and let's influence it by tripling or doubling the rewards payment if they just do tap payments. And then finally, embedded offerings within non-traditional financial institutions, like T-Mobile, offering 4%, no gimmicks, 4% interest on a savings account. So what does this mean? If you look at the trends, they're clear. It's not 10 or 20% growth. You're seeing triple-digit growth from them, from these organizations. And you're seeing it from the Gen Zers. They're not going to the RBCs. They're not going to the Bank of Americas. As I mentioned earlier with Chime, look at the number of primary bank account holders. Look at Chime. You have Bank of America, all the community banks collectively, all the credit unions collectively, and Chime is in the top tier of overall ownership growth and primary bank customers, but yet they don't hold a bank charter. And then you look at Credit Karma's growth, which this was the latest data I could get because they were sold to Intuit, but there are over 100 million users on Credit Karma, and you could see their massive upward mobility growth. So unless you want to receive a snap from your kid like this, and instead get a snap like this, let's listen. Let's start evolving more rapidly, and to meet overall consumer demand for the emerging wealth generation. Thank you.